All right, I can't keep my silence anymore. What's going on, guys? How's it going?
Hi, Eric. How are you?
Hey, Polly. I'm good. How are you doing today?
I'm busy as hell, actually, and already really tired. But I really eager to hear a lot of opinions on today's hot topic. Yeah, remaining finance, DeFi's role in the disruptive tech revolution, and I hope that our speakers today will give a lot of insights because it is a hot topic indeed. And yeah, like to hear more from others. And yeah.
Nice, Polly. Nice. Well, love having you always, and hope your Twitter account is good to go this time around. Um, for
Don't
sure.
remind me, Jesus, it was a catastrophe. I'm so
Hey, you
sorry.
you made you made it in one piece. You made it. It's okay. It happens. It happens. Well, thanks, Polly. Appreciate it. Defun, John. What's up, John?
How's it going? Can you guys hear me?
Yeah, I can hear you great.
Awesome. Yeah. Thanks for letting me hop up on this. This should be a cool one.
Nice. Yeah. Reimagining finance. It's changing super drastically, and I'm excited to learn more about that. Crypto, Mana. What's up, Mana?
Yes, great. Hi. Very nice to meet you. I think this is my second or third time on your Twitter space. I'm doing well. Finally,
Yes.
kind of recovered from the strep throat for the last several days.
Oh my gosh. Yeah. Good thing. You sound great. So it sounds like you're all better now, huh?
I am. After 4 days of antibiotics, I think I deserve to get better.
Oh my gosh. Yes. Oh wow. Antibiotics. Yeah. You got to be careful with
Yeah,
those things. Those things are strong.
same here. I get your sister.
Yeah, I mean the doctor prescribed it. It's very strong, but I guess I have to finish the dosage, and then I can say, oh, I'm fully recovered.
Sure. Definitely. Well, glad to have you, and I'm glad you were able to make it. And it's always a pleasure hearing your info and your insights. So awesome,
Hmm.
Lena. Sounds good. And Brian from Meadowpool. What's up, man?
Yeah, hi everyone. I'm Brian from Metapool. I'm currently in Peru. That's my hometown. And the protocol I represent is like almost everywhere, but focus on what we call frontier markets. It's what banks say emerging markets, basically that. And we are a liquid staking ecosystem. So yeah, happy to be here.
Hmm. Interesting. You said you're in Peru.
Yeah, from everybody should know Machu Picchu. So yeah.
Okay. Yeah. Yeah. Yep. Peru. If I'm not mistaken, the Nazca lines are in Peru.
Yeah,
Is that right?
you're right.
I
Yes.
I actually had the opportunity to fly over the lines whenever I was visiting Ecuador for a while. I lived there for a couple months. Absolutely loved it. Adore that side of the world.
The world is really small. Just to know that and meet in a space. Yeah, that's crazy, man. Happy to know that you already know my country.
Definitely, definitely, yeah. I've got some friends in Venezuela. Yeah, I definitely would like to go back down there, and I had the opportunity to potentially live next to the Galapagos down by Bahia in Ecuador, and I was able to go to a children's school, and their mascot was a Galapagos turtle that they had in the schoolyard, and that was really interesting.
Yeah, and in these countries is where this technology is like impacts most. Like
Right.
just a fun fact before we maybe go to the to the main topic. Just to let you know, guys, here in Peru, Blink BTC, this Blink wallet, like was the Bitcoin Beach wallet in the
Mm-mm.
that you maybe already know because El Salvador was the first country to adopt Bitcoin. Well, that wallet got more users on Peru than any other part of the world, and it's crazy because media shows you that El Salvador is bringing the adoption and whatever, but here in Peru, in the poorest zones, is where an NGO is bringing this onboarding and adoption and even Bitcoin pattern. That's just to lead you the imagination how this technology impacts here.
So how, I guess, quick question, like, then, do you think this is an advantage? Will you do anything special with, let's say, local government or authority companies to expand that kind of advantage while you are being local building there?
Well, I'm not sure if I will say it's an advantage, but I will say here this technology makes sense because governments is not doing their job really well. Being honest, there are like more than 50% of people that is underbanked. So basically, DeFi makes sense a lot, and not only DeFi, even Bitcoin is helping here for people that is not in this in their city town, for say something. They don't have banks close, they don't have places where they can pay or even get loans, and the traditional finance basically. So DeFi is the only way. It's like you don't have any other alternatives here, so it makes sense. And if you are like me, a DeFi builder, so it makes more sense and also brings me more joy because I'm bringing these doors to my community basically.
Cool, thank you.
That's killer. Yeah, DeFi. Anybody with a phone, is like can access like all these different resources and finances, and it's better than the traditional banking industry for anybody that has the option to go to the bank, just like in the U.S. I I do go to the bank, but I really don't need it anymore. With all the resources and being able to do everything autonomously and through different apps, and it's going to continue to go that way, and I'm excited to get into that point. But real quick, Houdini, Aaron, is that you, man?
Yeah, buddy. GM. Thanks so much for having me on. Can you hear me okay?
Yo, what's up, brother? Yeah, good.
Awesome, man. Awesome. Pleasure to be here.
Nice. Well, I think we'll get right into it, everybody. As we, get some listeners to join us. If you guys want to retweet the space, I just reposted it to get a few people to join us. And I'm excited to hear some insights from you guys and learn a little bit about, the space that you guys have been building. So you're the experts, I'm not. So I'm going to ask you guys the questions. And for anybody that has the answers or wants to provide you the insights, just raise your hand or just jump in the conversation. Whatever, doesn't really matter to me. So again, pleasure to have everybody here. I'm Eric. I host the spaces through Web3M, and we created a platform called the Collab Hub where everybody joins to collaborate together for organic marketing. You can join Twitter Spaces whenever you want. Just go to the website, pick the space that you want, and of course, you can choose the topic, date, and time, whatever. So I put it together. So thanks everybody for joining. And if you guys could give like a short intro to who you are and what you do, that'd be great. And Defund, if you want to start, that'd be awesome.
For sure, yeah. So I'm John with Defund, one of the founders of Defund. And Defund's been going through a hell of a journey lately, but what we are now is a sovereign rollup that leverages Celestia's data availability layer. For anyone that doesn't know what Celestia is, pretty much just allows us to share the consensus. We originally started off as a Cosmos SDK L1, and we made a pivot because for a variety of reasons, but mostly we realized that we don't need the traditional bootstrap your own validator set and all the other stuff that comes with it. But by moving to this sovereign rollup infrastructure, we've actually been able to become a full DeFi hub for all things modular and make some really cool stuff. So we announced it really yesterday with the Celestia and Rollkit teams about how we're rolling out this really cool DEX that aggregates liquidity cross VM. So the EVM ecosystem, Solana ecosystem, Move ecosystem, Cosmos ecosystem, we can tap into all those assets and we're in tandem launching an options protocol with max leverage. I'm talking like 1,000 times leverage without the risk of liquidation. And actually combining those two together, you can now provide liquidity cross VM into pools that are automatically hedged. So actually removing the impermanent loss that you normally see on these pools. So a bunch of really cool stuff that we've been building defund for years for, but we had an opportunity to make a real jump with it and turn it in a different direction, and that's what we've done. And yeah, so that's defund.
Ooh, nice, John. Liquidation free leverage. I've never heard of that personally, so
Yeah, it's
I'm
pretty
definitely
cool.
gonna take a look.
It's pretty cool. You just pay the premium up front, so that the most you can lose
Ah.
is the premium.
Got you. That makes sense. Well, thanks,
Yeah.
John. Appreciate that. And Aaron from Houdini, what's up?
What's up? Yeah, man. So just, I guess, quick background on myself. Class of 2017, early Ethereum and Bitcoin investor, just kind of speculative. I started my career on Bay Street, which is kind of the knockoff Canadian Wall Street. So I'm a TradFi, started and held positions in asset management at Fidelity and Mackenzie Investments. And then kind of just got bored of the corporate suit and tie life, started slinging NFTs during DeFi summer and was just making more money doing that than a full year's pay on a TradFi job. And then helped a few buddies start SXBet, which is now actually scaled up to be one of the largest blockchain betting exchanges in the world. So like a peer-to-peer sports book, all on chain. And then I left that about after a year and a bit, and joined Houdini Swap. And so I'm just one of the early core contributors there. We're a pretty small and light team, but basically, just in a nutshell, Houdini Swap. I won't bore everyone with it, but at our core, we're a cross-chain liquidity aggregator with a unique set of privacy tooling. So what we enable for users is Bitcoin, Solana, so EVM, non-EVM transactions, and we enable them to be sent privately. And I can delve pretty deep into how we achieve privacy, but it basically started at a demand a year ago. We've been live for over about a year and a half now, and we had KOLs, influencers in the space coming to us, basically saying that there was a demand for a compliant privacy tool. There wasn't really anything out there. There was the tornado caches, the coin joins, and the mixers that were kind of opening the doors to nefarious and illicit activity. And we've seen the rise and fall of those, so I won't get into it. There was privacy tokens like the XMRs or the some ZK tokens, but they didn't really offer any kind of DeFi or smart contract capabilities. So it's basically just like holding a commoditized asset. And then there was some security and privacy at the centralized exchange level, but we kind of all know the story there. You take on a whole new set of risks with counterparty, and they freeze assets, and so you take on a whole new set of risks to achieve that level of privacy. And really, these influencers told us that as soon as their wallet address is out, and a lot of them are publicly available, they're doxed. They have, when they're trying to get into projects, they're getting copycat trading, they're getting sandwiched, they're getting MEV trading, and so that's just on the in transaction. And on the out transaction, even they're trying to get out of a project and take some profits, and there's just a whole lot of FUD. There's just a whole lot of community kind of pushback when they see that you've been selling. And so we created this compliant privacy tool, and yeah, we just crossed over $1 billion in transactional volume, in this past year, and it's really just it's been immense. It started with this KOL solution, it percolated more into a B2B solution. So HR payroll companies were coming to us saying, hey, we're paying our employees in crypto. We don't want employee one to see what employee two is making. So we need some sort of B2B API. So we did that. And actually, our largest corporate partnership to date has been Maestro. Can't say enough about the team there, but they're the OG sniping bot in crypto. And so our Houdini Swap API is directly integrated in their wallets. So when you on-ramp, you're on-ramping privately into the Maestro wallet. Hopefully you snipe into some good tokens and come out with 100 ETH on the other side. And then you can off-ramp via the Houdini Swap API into new wallet addresses that are completely clean, and just really obfuscate the transaction hash between the sending and receiving wallets. So that's kind of what we do in a nutshell, and it's been a phenomenal success over the past year, and that's kind of it in a nutshell.
Nice, Aaron. Well, thanks for that info. And I can personally attest, Houdini Swap is awesome, super easy to use, super quick, and we'll continue to use it. So thanks, man. Pleasure to have you. And Crypto Mena, Mena from Native. What's up, Mena?
Yes. Hello, everyone. My name is Mena. I'm the co-founder of Native. Native is DeFi's omni-chain programmable liquidity hub. So I believe, like for the two speakers earlier, you guys can all integrate us as the liquidity source. And we do have a very, very special liquidity flywheel, so to say. So through our unified layer, we aim to provide the most capital efficient liquidity across blockchains and the applications built on top of them. From any supported chains, liquidity providers, they can supply assets to our native land and then receiving yields in return through our peer-to-PMM credit system, where sophisticated market makers use pooled liquidity on credit to deliver traders with optimal pricing. So by using our peer-to-PMM credit system, here PMM short terms for professional market maker, the liquidity providers, they will receive high and sustainable yield from the actual capital utilization inside the native land pools, while on the other side, market makers, they will be able to post just one post collateral on one single chain, but they will be able to get chain agnostic, asset agnostic credit to be utilized for facilitating all those transactions on chain, so that with the same amount of capital on chain, they will be able to facilitate many more transactions and making more profits. And on the other side, for the traders who either come directly to Native Swap or who goes to the aggregators who has already integrated us as the liquidity source, such as 1inch, OpenOcean, all those, they will be enjoying super competitive pricing coming out of our liquidity system. And those PMM pricing are usually without any slippage because there's no on-chain factors that can impact the quoted price. And then so far, we launched our native swap functionality back in April 2023, and we have already settled a little bit over 3 billion in terms of spot trading volume. And recently, we just started the deployment of our money market, which is the native land propulsion, Mantle, ZK Link, Arbitron, and next up will be the mainnet, BNB chain, and Scroll. So really looking forward to see the growth there. And right now we also have like a couple of campaigns ongoing on Mantle. And then this week we will launch a big Arbitron campaign where we will give out our Arbitron grant together with our partners such as EtherFi, SAW BTC, Bedrock, to incentivize the users. So not only the ARBs will be given out, but also our partners' points, such as like EtherFi, they are giving a 3x booster point for any users who supply wrapped Ether into native land. And I think that's enough for the product side. So really looking forward to connect with everybody here and to discuss more improving the capital efficiency for liquidity in Web3. For my personal experience, I joined the crypto space back in around the end of 2021. Before crypto, I was in the data science industry. I manage global data science teams to deliver customized data science solutions for financial services, technology, marketing, and pharmaceutical. Mainly, my experience was doing consulting for a lot of different financial institutions around Wall Street. So all those like big banks, hedge funds. And then after 2021, I started to learn more about crypto. During the middle of 2022, I started my own podcast channel called Crypto Mena. And then the year end of 2022, I started Native as the founder. So that's like a general timeline. And really happy to meet with everybody here.
Nice, Mena. Well, pleasure to have you again. It's always nice hearing your insights since you've been in the space and building for so long. And Mena had a great point throughout this space. Keep an eye out for any collaborations. You guys never know, what can come from it. And so, Polly from Mids Capital, what's up, Polly?
Yeah, hi everyone. I'm not gonna speak for a long time here because I have a lot of calls with some partners. But still, I'm here speaking on behalf of Meets Capital, this new market making company. And this is the most transparent approach that I have ever seen because recently, our terminal is went live, and you can see all the statistics, all the dashboards, on the all criteria that you need to understand if you have your own token. I'm token for founders right now, and yeah, but actually just I'm kind of an octopus in strategic partnerships in Web3, and I can help any project at any stage, before TGE, after TGE. At Meets Capital, we have a lot of connections with VCs, with OTC platforms. So yeah, a lot of possibilities for networking from our side. Also, I try to host twice a week my own podcast, Liquid Lounge, also on behalf of Meets Capital. And I investigate some minds of investors in Web3, and some interesting rules and unusual topics. Yeah, pleasure to be here. Pleasure to discuss the hot topic that Eric said.
Nice, Polly. Always a pleasure to have you again. And Brian from Metapool. What's up, Brian?
Yeah, that was really interesting to listen. I got really deep in the conversation. Well, hi everyone. Hi the ones who just joined. I'm Brian from Metapool. We are an ecosystem that believes in decentralization, funded by Latin Americans, Lucio Tato from Argentina and Claudio Cosio from Mexico. We understand inflation and limited opportunities, as well as the incredible potential for exponential growth in this industry. Since joining last year, I have seen an incredible growth by more than $100 million in TVL. And I believe much of this success is because the excellent system focus on community. And how do we achieve this? We give the majority of the benefits back to our community. As a liquid staking protocol, every time someone stakes, there are certain fees that we ensure go back to each active member in Metapool through MPDAO grants and our vote to earn program. MPDAO grants, at the moment we have a round that it's like more than $140,000 for builders, for developers, and for everyone who want to build something in collaboration with Metapool in wherever you are. It's like decentralized community choices. And even if you are in Philippines or Nigeria and want to make an event of education, or maybe you want to make an integration with Metapool, we can fund your idea if the community likes. The community approves through their vote. And how you can get a vote, basically with our governance token called MPDAO. When you lock it, you get voting power, and that's how you can start to vote. And when you vote, you earn rewards. These rewards are basically our protocol fees back to you. That's really, really nice, and it's honestly cheesy rewards. So at the moment, this initiative has impacted more than 19 projects in Latin America and multiple projects in Asia, United States, and the Caribbean, and Europe. We would like to reach all the zones that need most, like not only Southeast Asia, but maybe Eastern Europe or Oceania. So everyone, if you have a community in those places, feel free to reach me out after this space. Well, going back to the Metapool, we are currently on Ethereum, near Solana, Aurora, and Q Network, but in the future we will add more layer 2s and more blockchains. So something really cool is we achieve 90% of user retention during bear market, and it's because this system, and that's why I really like it. So basically, Liquid staking, for the ones who don't know, maybe, is have your assets in liquidity. So how you do that? You put stake maybe near or Ethereum, and we give you back a liquid staking token. This liquid staking token makes you able of two things: earn rewards, hold your assets, and have this liquidity moving and flowing in different DeFi applications like Burrow, Finance, or Tenet, where you can put this liquid staking token and maybe make a loan. So if you have knowledge about the market, you can hedge. You can have a really nice hedge, because when market dumps, your liquid staking asset will be always more with more value than the original asset. So that's a way to hedge. And also, if you are maybe a super smart trader, you can make arbitrage. So sometimes the price goes back, but the liquid staking token goes up. You can sell and buy again and stake. Yeah, there are many opportunities there, but I will not go through this technical side. So just focusing on the different use cases. So basically that for a small intro for Metapool. And sorry to forget, we have multi-chain governance. It's basically the first in the history, and in the future, we don't know right now in the future, but right now we have governance with Ethereum and Near protocol. So our users in Ethereum are able to participate in the governance of Metapool, as well as our users in Near rule the world, but maybe multi-chain. So that's why we enable this multi-chain governance.
Oh, were you done, Brian? You kind of cut off there. I'm not sure what happened. Oh, I'm having a hard time hearing Brian. I'm not sure if everybody else cannot hear him, or if it's just me. Spaces.
Yeah, I also cannot hear him.
Okay. Brian, I'm sorry, brother. I got to cut you off if you're still talking because I can't hear you. I'd love to hear what you have to say, of course. But Metapool, they have a ton of different things going on. Definitely go check them out. And we have pardon me. We have a request. Bullish Pizza. What's up, man? We'll bring you up. See what you got. You got a question or a comment, whichever. It's a very open space. We'd love to hear from you. Go ahead, man. The floor is yours, Mr. Bullish Pizza. Mm-hmm. Okay. Gotcha. All right. No problem, man. If for some reason you want to jump back up here, or you can post your question or comment in the comments below. I'm gonna remove you off the speakers. But thanks for jumping up here anyways. So let's get into the questions, guys. Thanks for all those intros. Learning a ton from what you guys got going on. So the first question, what does DeFi, or how does DeFi differ fundamentally from traditional financial systems? And I know Brian kind of started to hit on this, but Polly, please.
Can you hear me well now?
I can hear you great.
Awesome. Because I have some problems with the network here as well, but still, let's see how it goes. So, fundamentally differ. Yeah, actually, imagine traditional finance as a club with a strict membership policy and a gatekeeper who controls everything. DeFi, on another hand, is like an open source playground where anyone can join and build whatever they want. Firstly, DeFi operates on a decentralized trust system. This means there is no central authority or bank calling the shots. Instead, smart contracts on a blockchain ensure transparency and enforce agreements. And secondly, DeFi leverages blockchain technology, which creates a permanent, mutable record of transactions. This transparency fosters trust and accountability, making it harder for fraud or manipulation to occur. And DeFi is constantly evolving with new applications and innovations emerging regularly. This dynamic nature fosters, I think, innovation and enables users to access a wide range of financial services, from lending and borrowing to trading and insurance. And in essence, DeFi represents a shift from centralized systems to a decentralized, open, transparent approach to finance. That's it. While still in its early stages, DeFi holds a very big potential to revolutionize how we interact with money, creating a more inclusive and equitable financial system for all. So yeah, it's basic thoughts, but still, I think we need to speak it out loud.
Definitely, yeah. The infrastructure, we no longer need the traditional banking infrastructure anymore in order to transact and do the things that we need to do with our value, with our money, with our USD or whatever currency that you have. Anybody else? Okay, perfect. So like Brian had mentioned, DeFi is such a major, how DeFi and all the resources available to people in DeFi is such a major change for different regions such as Peru. And so in what ways does DeFi disrupt traditional banking and financial institutions, and how are users able to access these resources much easier than with traditional banking systems?
Yeah, I could speak on that a little bit. So I would say it's easier to access these things because all you really need to do is just figure out how do you get your money online. Once you can figure out the onboarding process, then you can figure out, okay, now whatever the hell do I want to do? You don't have to schedule a meeting with a bank. You don't have to give your social security number. You don't, if you live in the States. If you don't, there's other barriers to entries in terms of identification and whatnot. And there are a lot of protocols and projects that are doing KYC, but the inherent, backbone is that you, as an autonomous person, as an individual person, you just find a way to put your money into the system, and then you could do whatever the heck you want with it once it's in this system. And then once you take it out, that's when you're like, okay, that's when I have to pay my tax. That's when I have to, submit everything else I've done. But for places outside the United States, it's a great asset, especially with places that have a highly inflationary currency where at from the start of the day to the end of their day, their money's worth a lot less. Crypto is a safe haven. They get paid, they swap it right in, and they feel more stable. They feel that they can actually, if you just bought a bunch of Bitcoin, you'd feel a lot better than holding a bunch of Turkish lira. So that's how, outside of the US, it's a great value add. Inside of the US, it's a little bit different. A lot of people see crypto as more of an investment because that's just the nature of the people, where also the US dollar is denominated as the world currency, essentially. So it does have a little bit different of an effect in the United States, but the actual barriers to entry to get into crypto are not that hard. You just kind of need to know your way around a computer. And as more and more stuff comes out where, you could just hook up an already existing bank account or existing prepaid debit card, or, you can even just go to a Bitcoin ATM. There's still some hurdles you have to jump through, a little bit of technical stuff, but you don't technically have to ever actually speak to somebody, if that makes any sense.
Definitely. Yeah, I completely agree.
And I would say, maybe, I guess, to compare it to a little bit to what we're doing, to access the decks that we're building and access the options that we're creating, right? So the options that, you typically say, a lot of people, they've been exposed to options through Robinhood, right? They had to prove that they were some type of trader and they got access to options, a little bit different than how it traditionally is on an E-Trade account or whatever, right? You actually have the ability to just try something that normally you would have had to been certified or just proven you have a capability to do. I'm I'm on the boat that you should be certified to give advice, but you shouldn't need to be certified to try something. That's the way I look at it. So I think that in a way, the crypto, thesis, the crypto playground, it is a playground that is a sandbox where you can try new things and experiment with your own money. Because at the end of the day, you should be allowed to do whatever the hell you want with your money as long as you're not hurting somebody else. That's my personal belief. So that's kind of how I can connect it to some of the things we're doing as well.
Sure. And just for an example, you had mentioned, liquidation free leverage. That is literally Wall Street resources right there. Like that specific example, the regular consumer 10 years ago would not have been able to leverage their money and put it into an asset and earn and do all these different things that people that with billions of dollars only could access. That's exactly what DeFi is. And DeFi is a precise example of the change and how this is going to work. Anybody else with this specific question? Yes, Brian.
Yeah, for sure. Well, as far as I saw, in the 2017 was like 40% of people around the world underranked, and this is mostly one of the biggest problems in countries like mine, and well, not only Latin America, Southeast Asia has the same. So and some solutions that I have been seeing is like there are even community representatives with cell phones that allow access to multiple members. So the barrier for DeFi, in difference to banking, traditional banking, to starting to participate in this system is minimal. At the moment, 75% almost, according United Nations, has a cell phone. So we are talking about that these could enable doors for everyone, even if they don't have uh, banking or credit score or credit historial, to join a place where they can access to these TradFi uh, services like loans, borrows, lendings, and whatever that helps them to build their business and take the business to a different level. I just saw a really nice example with Motif. Motif is an NGO, and this NGO basically enables people. Maybe they can make shoes, they can sell pizza, or they can sell clothing. This NGO helps them to sell around the world and accept crypto for keep doing this. So the opportunities in DeFi for these people is let them the opportunities to invest, to save, and connect to the world, make their business able to escalate in different ways that banking is not even trying, because they don't consider these people as proper clients, because there is no way to validate them, and this is basically not financial inclusion, right? And in places like the Andes, these places close to the mountains where there are no institutions, basically some people don't even have identities, but they have business, and they are sustainable. They have a life proper to their places, right? Maybe limited but isolated to the world, and that's where DeFi can connect them to different parts of the world, and that's what we are trying to do in Marapool as well.
Oh, that is just absolutely beautiful. I love that so much. Being, this is just bringing us closer as a community. We're not so segregated anymore. Not to mention all the resources that we have to take advantage and be able to compound our assets and things, but also, bringing us together, as a relationship, with others. Because without DeFi and without Web3, I probably wouldn't have met you guys. So that's an interesting take, Brian. Thanks for that. Nice. So, with all this, there's so many opportunities in DeFi. Can you guys list some examples of some really interesting um, advantages in DeFi? Yeah, Polly, go ahead.
Yeah, I can start, I guess, and then colleagues will continue. So actually, DeFi operates on a decentralized foundation, meaning anyone with an internet connection can access its services, regardless of their location or financial standing. This opens up a world of possibilities for those currently excluded from traditional financial systems. In underbanked regions, millions lack access to basic financial services like bank accounts, loans, or insurance. DeFi steps in to fill this void. So, yeah, and it offers alternative solutions that are both accessible and affordable. Like you can imagine a farmer in a remote village needing a microloan to expand their harvest, and through DeFi they can connect directly with lenders, bypassing traditional banks and their restrictive requirements. So yeah, stable coins, digital currencies pegged to traditional currencies provide a stable medium of exchange, and DeFi opens doors for innovative microfinance solutions, enabling communities to access funding for small businesses, education, healthcare. I personally pay for my education in crypto and for some courses, and I'm very happy about it. So yeah, and I can connect and transfer money to my mom wherever, whenever I am. Just need to have an internet. So yeah.
Nice. Yeah, you can't transfer cash without asking the bank if it's okay, and you got to make sure that their banking hours are open and all this stuff. So those are awesome advantages, Paulie. Thanks for sharing that. And what about like like making your, like, whenever you have say $1,000 in ETH or whatever asset that you have, there's so many ways to compound that asset in DeFi. Could you guys outline like different cases where you're able to take your asset and potentially multiply it, doing certain things?
I would like to chime in on this. I think the most easiest way for users to compound the yield is like they will stake, let's say, their ETH, right, to some liquid staking protocols. And then now we also have like liquid restaking protocols where you can restake your LST to become LRT. And then you also have a lot of those like money market who will provide those looping opportunities on top of that. I think I have two core opinions for this, right? First of all, if users understand that the underlying risk of doing all of those actions, laying on top of each other for all those rewards, then that's fine, right? You understand your risk, you also understand your upside. Then you just need to properly manage all your assets. Second is I have like fundamental concern about where this industry is going, and I think several days ago I even called out a couple of the major LRT founders that I have been working with, right, from DeFi, Stakestone, from Puffer, from Renzo, to comment on this topic, and I do plan to do another Twitter space to talk about that, because I think this is very, very similar to the subprime mortgage crisis like a couple of years ago we have seen, right? Because people are just layering or looping or farming all those rewards out of nowhere. Because technically speaking, those rewards, there's no actual capital utilization for all those assets, and thus no real revenue stream to sustain all those high APYs. So that's why like I'm generally a little bit concerned. But with that being said, I think as a retail liquidity provider, we can still probably enjoy the very high APY on the short term, since the majority of all those protocols, they are trying to expand to more chains, farming more yields from different chains, expanding to more money market or yield aggregators, where another layer of rewards will be rewarded to those assets. But I don't think this could be sustainable in the near and middle term. And that's why, like at Native, we have always been very, very cautious in terms of what kind of assets do we enable the users, the retail users, to use as a collateral. What kind of assets do we enable the users to borrow? Because I'm just generally concerned that most of the retail users, they don't foresee this risk, the upcoming risk, that will have like a very cascading effect. While on the other side, in order to boost the actual capital utilization, I still open up the utilization for professional market makers, because all they do is they will calculate their cost of capital across different venues, calculate the PML, and measure the risk as well as the profit associated with that, and conduct rational decisions. And in that way, I hope, like, while we are providing the retail liquidity providers an easy and safe way to just supply single token into the land pools, but on the other side is the actual the professional market makers, the traders who are utilizing those assets in a safe but highly efficient way, so that like when they pay the financing fee to the protocol, we will share all those financing fee back to the liquidity providers. So it's the both the supply and demand of the liquidity side are fulfilled by this financial infrastructure. And to summarize, I think, like, really be cautious, and I do want to flesh out or get more opinions with like industry friends and founders on these topics again, because this is definitely worth everybody's attention. And I do think, like, if we keep farming this for a longer term, the next bear market might be caused by this. I know it's good to add more utility and more yield farming opportunity for all those tokens, but we need always be cautious and really trying to figure out what's the real use cases for those tokens and DeFi protocols.
That's an extremely that's a very important topic to talk about. I'm really glad you brought that up, Mena. Does anybody have any insights to the balance of sustainability and what she is mentioning? I'm sure that goes quite deep in understanding that. But just a quick question to you, Mena, about that is, for users, that's why Twitter Spaces are such an amazing resource to be able to talk to founders like yourself, Mena, to understand these insights. Because without us, learning from you guys directly, there's really no way of understanding it other than, doing your own research on YouTube and everything. But hearing it from you guys is so important. So what would you say to users that are navigating the space that want to get into DeFi and get all these crazy APYs? What would you tell them to keep an eye out for whenever they're choosing where to put their assets?
I think general rules is, like, if a lot of KOLs are telling you all those like complicated strategies that you need to conduct, probably assess the underlying risks associated with each of those steps, right? General rule of thumb is the more layers, the more protocols you are engaging with, the more risk you have, and the risks are multiplied by each other, not adding on top of each other. Because if any of the one, let's say if your asset's gonna go through 5 protocols, right? If any one of the protocols out of those 5 protocols have insolvency issue, or simply put, they just rock, then you lost your assets, right? And that gonna cause the chain reaction for this, right? Another thing is I think don't try to do super complicated things. Again, even me, for myself, I engage with different DeFi protocols to understand their product features, try different things. But I never put a huge lump sum of assets into any of those until, like, it's I make sure, okay, the audit report is sounding. I know their team members, this, that. Of course, I think as a retail user, it's never the case that, oh, you will know the founding team member or be close to that. But I will share, I guess, what those wells will do, right? Actually, in addition to the auditing report that you guys see on the official website, those wells, they will also have their own, usually they will always have their own auditing team to audit the smart contract out there. So if the wells are super cautious about that, you yourself should also be cautious about your assets in a different way. Even if you don't have the access or you don't have the resources to audit the code by yourself, but at least take time to go through how their mechanism works. What is the underlying risk? If there's an underlying risk, which party is managing that specific risk, right? Different protocols, for example, lending protocols, they at least they will share with you, okay, how the money is utilized, what's the balance of that, who is managing the risk. For example, I think Morpho, they show that, right? Even though it's just a quantified, again, a third party providing the information. But if someone is not providing you with your information, then that's a definitely huge red flag, right? From when I'm building our own like perspective, I always ask the team, right, to explain exactly how we are using the money. If the market maker are using the assets inside our lending pools, then we show the real-time balance, right? It's all on the blockchain. We write all those data on chain. What's the aggregated short amount of that specific token that each of the market makers owe us, which is the aggregated long position of all the market makers or each of the market makers that are owning, that are having against the pool. So all of those, I think the purpose of having blockchain technology is actually the data transparency. And if you as a retail user, you don't know where to find those information, then ask around. It's out there. All you need to do is find the right source of data, dig into it a little bit more, filter out the useful information you have, and go from there. If the project itself, they just simply don't want to disclose, oh, after you stake the money, how they are using the money, then I think you should be concerned. I mean, at least I will be concerned. At the end of the day, you can only use the information that's available to you to make a rational judgment. But at least do the step first is know where you could find the information. If you couldn't find, then red flag it.
Amazing. Anybody listening, I would definitely listen to that again if you didn't take notes, because there's a ton of gold nuggets in what you just said. Thanks, Mana. Brian, please.
Yeah, thank you. Yeah, that was really interesting. I also follow you. Thanks for the insights. Yeah, it was really nice. I think the main benefit of DeFi and all our talk was is sovereign over your own money. This might not sound so important until events like the Corralito happens. What is Corralito? Maybe for English speakers, I will say a small enclosure or playpen. This basically is a strategy implemented by governments to prevent capital bank runs, or simply to be authoritarian by nationalizing, taking assets, removing private property, and arbitrarily taking advantage of people's capital, with the excuse to we are saving banks and not caring about the people, basically. This involves limiting deposits, withdrawals, or even banning accounts without seeing even a word. That is why it's not only important to log the APY, but also to consider where you put your value, where you put your money, your assets. In this case, staking in chains that seek to preserve your sovereignty is essential so that we continue to have alternatives, means of survival against tyranny, and a more inclusive world. In the long term, this is essential for good development. So the rewards came for secure the network, So we should not forget that we are earning rewards, and yeah, nice APYs and all the stuff, but we are also securing the network, and we are preventing that these systems are able to secure our new applications, our voice, and our opportunities. Because when this technology gets monetized, governments will try to ban, probably, or will try to take the power over these applications. So what we can do to help this technology success is stake. In this case, in Metapool, you can stake. You can help us to bring more security to the network, and also earn rewards, and also uh, fund more people, builders like you, or enthusiastic people who want to learn more and maybe make events of education and keep spreading the word. So yeah, that was all for me, and thank you for inviting me to this really, really nice space. I really enjoy to hear different voices and different perspectives that want to aim the same, this financial inclusion.
Amazing. I also enjoy it. And thanks so much for everybody for joining us today. I learned a ton. I'm going to be listening to this again, maybe clip a few and drop them on my social media. But thanks so much, everybody, for coming. You guys are awesome. John, Maida, Brian, thanks again. And we'll see you on the next one.
Thanks. Bye, guys.
Thanks for having me.
Bye, everyone.